So the decline of interest rates by 20 percentage points over that period was a dominant factor in the financial world. I think it was the most important single event in the financial world in the last 50 years. It doesn't get the credit.
When interest rates decline, borrowing money gets easier and easier. The interest rate expense is lower, thus you can service a larger loan. But what this long time?
Remember 1980,
long time.
Remember
long time.
Remember 1980, the Fed funds rate.
Long time.
Remember 1980, the Fed.
Long time.
Remember 1980, the Fed funds rate was 20, and I had a
long time.
Remember the ability to predict the future. And in general, I agree with John Kenneth Galbraith, who said there are two kinds of forecasters, the ones who don't know and the ones who don't know they don't know.
That there is Howard Marks, co-founder of Oaktree Capital Management and all-round legendary super investor. Over the years, he's built a personal net worth of over $2 billion, but beyond his incredible investing career, you might also know him from his investing memos, where he explains all the important events he sees unfolding in the markets.
They're mostly a discussion of what I see happening. I'm not a futurist, I'm not a forecaster, but I think that what I say is we never know where we're going, but we sure as hell ought to know where we are.
Marx has been writing these memos since 1990, but if you've been following along with his thoughts over the past year or so, you'll know that he is currently seeing a major sea change occurring in the stock market, one which will have lasting implications. The sea change he refers to is the fact that the easy money environment we've all become so used to is now over, and it doesn't look like it's coming back for a long time.
Remember, in 1980, the Fed funds rate was 20, and I had a loan outstanding from a bank at 22 and a quarter. 40 years later, the Fed funds rate was 0, and I had a loan outstanding from a bank at 2 and a quarter. So the decline of interest rates by 20 percentage points over that period was a dominant factor in the financial world. I think it was the most important single event in the financial world in the last 50 years. It doesn't get the credit.
When interest rates decline, borrowing money gets easier and easier. The interest rate expense is lower, thus you can service a larger loan. But what this long-standing trend of declining interest rates has created is a lot of inflation in asset prices like stocks and real estate, and it's also created a very high debt environment as everyone leveraged up to their eyeballs because they could.
In the period 09 through 13, the Fed took Fed funds rate to 0 to fight the global financial crisis, left it there a long time, and didn't have any luck getting it back up into what you might think are normal ranges. So we had a low interest rate environment, which made life very easy for borrowers, asset owners. It was easy to run a business. The economy did well. We had the longest bull market in history, the longest economic recovery in history. We had very low incidence of default and bankruptcy. It was an easy world.
Trimming half right here into the close. I'm actually down on the day here. Got a little bit of a late start. Everybody can hear me. I wasn't feeling too good today. Let's see. Are you on YouTube? Never mind. Here we go. All right, so we hit. See if they have their shit together yet. My God, no, they don't. I've noticed this now on 2 different platforms where I do something and
if you read articles about, for example, Silicon Valley Bank, they talk about the easy money environment. And the main point of sea change is we're no longer in an easy money environment.
That's the problem the world faces currently. The sea change is happening as we speak. Interest rates are rising, and as Marx says, the easy money period is now over. As interest rates rise, loan repayments become more costly. Less new loans are taken on. So the economy slows, workers lose jobs, and it's a much tougher time. But the real issue this time around is that because interest rates have been on a multi-decade downtrend, society has gotten very used to low interest rates being normal interest rates. This has led to households taking on record amounts of debt. Household debt to GDP has skyrocketed since the 1980s.
If you came into this business since 1980, which is almost everybody, you have only seen declining interest rates or ultra low.
My man talking there, that is Howard Marks. I know he's not a YouTuber or a TikToker, so you may not know who he is, since I'm assuming you get most of your financial advice from TikTok. Hopefully you don't. I'm teasing there. Let's pull up the newsletter. If you're on my email list, well, that's free. So even people in Arkansas can afford it. If you come over here, what I've been trying to do is kind of a homework assignment. Lately, we've been using Howard Marks. This week, we're going to be talking about the impossibility of prediction in any sort of accurate way, and what that means for the money flow, and how do we trade when we don't know. And it's actually kind of freeing. If a guy's worth $2-3 billion, they call him the mini Buffett. He has no fuck clue, and Buffett has no fuck clue. Well, the fact that GP doesn't have no fuck clue makes my life easier, because none of us do, and yet we can still make money, and that's the cool thing. And that's the thing about trading, is simplicity of trading, man, and simplicity of the stuff you need to. My guys say you can't say that. All right, I'll take it down. Don't call people a loser, Jared. They don't like that. I'm sorry. Let's see. I'm sorry. Look at this guy. JVIC71755 file.save.as PDF. That's a dude you just block. The moment you see that dumbass name, you just block it. It's obviously a bot or someone that wants to be identified as a bot. Hopefully everybody can hear me. Let's check StreamYard. Seems like we can. All right. Give this just a second as we run into the close. Did we just hit 3? Okay. They got us out. So nice move into the close. Almost hit. I love that, man. There's a guy here in town. I was trying to show it to him. He does that DJing stuff with the thing. And I was showing him that song, and because his songs are horrible. And I was like, dude, you should make me one like this for the money flow. But one thing I found about musicians and artists is they're really fucking slow. So nice run up. I did not do too well today. I have to check what we closed out at. I'm going to assume somewhere around 38, 27, 28. If you're on my email list, we sent out, I'm going to start sending a lot more emails. I got someone helping me. And if you haven't noticed, we've cleaned up Discord. I got someone helping me on the Discord end. And we're going to try to tighten up a lot of things here, man. I got a artist person going to help me with some of the, just make some of the stuff we've already done, the courses and things better, so that I can pursue my love of trading. I actually love trading more than I like teaching trading. What's up, Andrew? I like trading more than I like teaching people about trading. that's my thing, man. If I was to get taken offline, you will find me here doing what I do, what I teach, doing real estate, doing whiteboards. I'll write, try to put out memes. But if you're not on my email list, get on it in case we run into issues again with Instagram or whoever. This here is a chart of Hershey's. I think it was Michael from the Wealth Squad. Yeah, kind of first brought it to my attention when we were breaking under the 200, and I didn't jump on it then. And I looked at it over here, and then we just took a whole nother leg down. And now it's like we're so far down here that it's like I don't know if we keep going down or not. I don't know. I don't have any way. Just like Mark's just said here. But I do know deals.
People tend to say, well, that's what it's been for 40 years. That's normal. That's what it's going to be. But no, you have to recognize it. That's why I call this sea change, because you have to recognize this is an important pivot.
And beyond just looking at the household, Marx notes that this sea change also heavily impacts businesses and even governments, who now face enormous piles of debt that's coming due that needs to be refinanced.
Yeah, this is a trickle process, this refinancing. I personally, let me show you my properties. I always feel weird when I'm in New Orleans because I don't get a chance to show properties a lot. So this is our website. This was one of our first. It's actually either our third or fourth property. We just affectionately referred to it as Avenue Pete. Now, see how nice it looks? It was so bad when I bought it, they would only finance the land. Okay. Now, the reason I bring this up is much like Howard Marks or Buffett, they would get involved in businesses that produced a lot of cash. So for Buffett, it was insurance companies, things like that. And then they take that cash, right? And then they come over here and they start putting it into stocks like Hershey's. So they'll take that tenant's money, and I couldn't buy insurance companies, but I've been studying. I feel like I'm not on YouTube. It shows I'm on YouTube. Do you know my YouTube, D? Let's see what it is. What's up, Jess? Now, if you got that email this morning, Jess there wrote most of it. So it's my website, right? And it's a real complicated name, G&D Rentals. It's pretty complicated. And if you'll notice, and I'm going to get to why this is important, notice this, 800 square feet, 2-bedroom, 1-bath. This is not a magic formula. This was just my formula, okay? These are not flipping properties. They're too small. Maybe this one, 3-bedroom, 1-bath. This is 1,100, 1,300 square feet. These are the kind of properties you tend to flip. I mean, you can flip anything if you get a good enough deal. Tiny house here. What made this awesome was this property was on a couple acres. And this was not a normal deal because it didn't cash flow much. I think it only cash flowed like $110 at the time. We've since raised it, but all you need is one roof leak, one little thing here. If you had to fix this, that would eat up $110. I mean, so there's really no cash flow profit on this, but I knew the land was going through the roof, and this tiny house of 700 square feet that I only rent for $875, and my loan taxes and insurance came out to like $740. So ordinarily I wouldn't do that deal, but I knew about this because I knew the land in my neighborhood was going up. So this was around the corner from my neighborhood. And since then, the appreciation on this is almost $100,000. So it doesn't cash flow much, a little bit. The cash flow just kind of covers the costs. The play on this is just sitting on it. And then later going back and either borrowing it out or rolling it and flipping it into something else. And so that's some of the deals. Like same with, say, a Hershey's here. This is not going to knock you out of the park with its dividend. The dividend's not that, it's not like, wow. What I think a lot of people miss when it comes to dividends, and it took me years to get this. Was I on there?
Yeah, you're good.
Okay. Sorry, I keep feeling like I'm not live. We're working on a studio here, man. I really got to get that part down. And hopefully I can have some other people under the MFG umbrella go live for us. So I'm trying to bring some things in place. I'd like to get some other podcasts under the MFG umbrella. We got people podcasting that have things about, it has nothing to do with stocks, just their hobby stocks, but they have a podcast. Well, guess what, man? Other people in the MFG have similar hobbies, similar things. So surprises me more people don't approach me with things like that. In other words, think out of the fucking box, man. Where's Brittany? Brittany, you traveling. You should be doing a podcast talking about a girl trading. You could have been inside the MFG. You'd have tons and tons of followers listening. You could be putting that out. You could easily make a lot more money. But you got to jump on that, man. You got to jump on it, man. You got to think outside the box. A lot of people would love to follow your travels and see the trades you're doing, listen to the podcasts. It's all great stuff, man. There's so much of this. So many people inside our organization are doing cool shit, but nobody knows because you're fucking quiet and don't tell anyone. And so a life worth living is a life worth recording. I digress. Who's Brittany? She knows who she is. Let's see. So, yeah, last night we sent out this. We'd been tracking it coming down, 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 down. We finally got what I thought would be a good spot for a protective stop loss if you're trading. So what I tried to break down in the email, if you got my email, let me, man, I can't do this here, can I? Let's see. I wish I had the email pulled up. I don't have the email pulled up, do I? Anyway, in the email, what I was saying is, as an investor, this is a stage one buying opportunity, but so is that right there. And so was that right there. And so was that right there, all the way back down. And that's the way I would play it, man. I would play it that way. And I know a lot of people aren't buying into this because I've gotten a lot of people bail on MPW. You were fucking up. You're fucking up. If you do this every time one of your dividend stocks gets real cheap and you bail, you will have a very hard time massively prospering. Okay? What that tells me is they don't see this as an actual business. So if I was to start buying Hershey's here, which was way up here, now why has this come down so much, this trophy stock? Well, one is interest rates. Two, right? Because rich people who don't tend to own this stock, not a bunch of, not a lot of trailer parkies own this, man. It's mostly rich families that own Hershey's. The other people are the ones that eat it. So the poor people eat all the chocolate, get really bad acne, get fat. And then the rich people sell them the chocolate, and then they sell them the acne medicine, and then they sell you the fat loss program. Okay? That's what the rich people do. They sell you the chocolate, they sell you the acne medicine, and they sell you the workout plan to get your fat butt off of the chocolate. Right? So you got to start thinking like that, man. So if we're in the chocolate business, you pick up some shares here. Now, what if it goes to 171? Well, we're still in the chocolate business, right? We're still in the chocolate business. Would you rather be in the chocolate business at 191? Or if you could buy the company, would you rather buy it at 171? If you didn't own it. Well, shit, all things considered, if I could pay 171 right now, I'll do 171. But if it drips to 171, you're like, well, I don't know, maybe I should get out. Because they're basing that on when they bought it, where they bought it. And nobody gives a fuck where you bought a stock. That only means something to you, man. That only means something to you. So if you go around getting out of stocks, getting into stocks based on what you paid for it, you're not going to be a good investor, man. That's not how you make decisions. Again, I'm not talking trading. So as a trader, yeah, I'm going to have a protective stop here. As an investor, there's no such thing. It just goes lower. I'm not lowering my price point. I'm adding to a business that I own on a stage one. That's how I see it, okay? So it never occurred to me to sell MPW. Now, if they cut the goddamn dividend and everything goes to shit, then, okay, maybe we got to retake this, okay? But here's what I've found. by holding to my guns like that, the ones that do well massively outperform the one or two that I might ride really far down. Okay. And if any one position has you worried, that's because you got your position size jacked up, which goes back to you, not the company. Let me give you an example. Pentateuch Park. High yield dividend thing underneath the 200-day. We talked about that in the email. Casual and tactical. You guys should go check out her work. She's in the MFG doing content about women with guns. Definitely agree with arming women. Unless I'm out with them that night, maybe don't arm them. Just arm them when I'm not there. I don't want them shooting me. Let's see. Stage one. Look at this. It runs. See this run? So if we back this up, man. Look at this, dude. $2. It had been $7 and fell to $2. Well, if you're the guy that bails, well, you know, say MPW, well, the price went down and you get out, then guess what? You miss all these stage ones and you miss all these opportunities to compound all these dividends. And that's how this thing goes 3x, 4x, 5x, because the dividends kept coming. And every time they give me a dividend, it would buy like 100, 200 shares. And then look what happens. It goes all the way to $6. And all those dividends were like 2x, 3x, plus anything I bought. Oh, there we go. The oil concierge says she found me from. See, that's super cool. That is something I'm wanting to pursue more. Non-trading stuff. Not for me, for them. People who are around me that are investors, traders, who do other things. Like, I don't really have much of an incentive to promote another trader. But if someone's a writer, if someone was a rapper, a comedian, why would we not want to share them with the rest of the MFG? If you're an insurance person, shocks me. I don't have anybody doing insurance. I got mortgage brokers. They're too fucking lazy to get on a podcast. You know how many people in the MFG have bought houses and they could have been dealing with you? Man, we had a mortgage broker quit the MFG. That's the dumbest thing. He could have got so many leads. I got people all the time. Where can I get a loan? Oh, I don't know. Our mortgage broker quit. He quit trading. His girlfriend won't let him. So look, 2-bedroom, 1-bath. You'll notice a commonality with me. Everything is super simple. Same with trading, man. Super simple. Super fucking simple. If it ain't 2-1, I ain't looking. So the only thing I look at most of the time, well, sometimes I will 3-1. But this is my bread and butter, guys. So the moment one of these hits my area, bam, I'm on it. Bam, I got the money. Let's go. Shit, I don't even have to look at it. Let's put in an offer. You know, you get what I'm saying? Like, once you have it narrowed down to what it is then it's just a matter. Every time I show this, though, the simplicity of this, it never fails. As soon as I take questions, they ask me some fucking question about not this. Like, they go, oh, but what about? And they totally miss the simplicity of buying just tiny little normal properties that now there are, you know, what's funny is there's no inventory anymore. These are not for sale in my area anymore. And I just had 2 people offer me for my entire portfolio. We're trying to sell. They offered me for all these here. 12 of these are in Huntsville. And then I have 2 others in Huntsville that I use for house office. Then I have in Florida and then in New Orleans. But they offered, my point being is I couldn't do insurance companies. I'm not smart enough. I can't run an insurance company. That's not my thing. But I can create a similar effect where I buy things that produce cash flow, and then I take the cash flow and I put it into stocks. So things like Hershey's, right? Well, and here's what's cool. This will blow your mind. Let's say I save up whatever money. Now, you may find a different way of doing this. Buffett did it by buying See's Candy, buying Geico, buying, just whatever, any business that he thought could produce cash flow. And there's a lot of people out there that do this. The guy from Landry's buys businesses. I don't want to do that. I don't want no fucking employees, guys. I'm trying to get rich with no employees. I don't mind partners. I don't mind people working with me, free agents or whatever, but I don't want employees, right? I want independent agents on the same idea so that I don't have to hear any bullshit about, I had to go, the reason I'm late for work. I don't want to hear any of that. I want none of that. I want none of those conversations. I'm just at a point in life where I just can't be around losers, man. If you just can't get your ass to work, I just don't want to fucking talk to you. You're just too stupid to be around. That's where I'm at my age. So, but luckily, most of the stuff I do, you can do from home, man. I don't know how you guys work with people. Like, it drives me fucking crazy. They're all so lazy and so dumb that all you have to do, I was telling a friend this, he felt like he was starting over. He DM'd me last night. Now, I'm going to get on you a little bit, bro. You came to my house. We've been together like 2 years. God damn. Should be a master of this. This is simple shit. No excuses. Whenever I talk to you, I go, well, shut up. And then you're going to say it's going to make me go, oh, well, I understand. Nothing. You'd be like, oh, well, my wife was sick. I don't understand. Well, my mother don't understand. There's nothing that could come out of your mouth right now that would make me understand. Because I know what happens once you've decided and once you committed, man, Lord will move mountains. Bible says the faith of a grain of mustard seed. Well, goddamn, I guess you ain't got faith of a grain of mustard seed then. So get a little faith and start believing. But nobody's going to believe it if you're not doing the things you need to do. Does that make sense? So you don't need to be there now. Protective stop, stage 1 entry for buy and holders, also for traders. If I'm trading, this would be my target, right? And so you'd have a money flow pattern, stage 1, breakout, runs up, previous box. And then if we're doing the B&B, if I was a buy and holder, I'm actually going to trim some up here, even as a buy and holder, because we've gotten in such a nice little thing. I usually like to do one trim when they hit the 200, because often it comes back down. And then I can take that trim and add to something else. Does that make sense? Let's leave that. Let me look at CVS. Running a low-grade fever, by the way. Jess, just so you know. I think you got me sick. CVS. Stage 1. Stage 1. Stage 1. Stage 1. Stage 1. Stage 1. That would be how I buy it. So now if I'm a buy and holder and you get this right here, it never fails. Never fails. Someone will say, what are we doing with this? What do you mean? Are we keeping it? It's in the buy and hold. Why wouldn't we? As if the rules have changed. The only reason they mean that is, one, they're overweighted in that stock. So now they're worried. Because if you had 2 shares, you'd be like, oh, this is an opportunity. But if they have a lot, it's no longer an opportunity. Do you see how when you bought and how much you bought can now mind fuck your ability to see opportunities? Now you don't see opportunities. All you're seeing is red and losses. Does that make sense? So make sure you detach. Should I add to a stock or buy a stock? It has nothing to do with where you bought it before. As much as I say this over and over and over and over, almost no one gets it. It really takes a come to Jesus moment. It really takes a while. It takes a good 2 years to truly understand the money flow, unless you're just really, really good at it. Because most people spend more time in the restroom than they do studying.
Terms. Much like what people do with their home loans, it is very common for businesses.
Some of you ladies spend more time putting your makeup on, getting your clothes right, getting your dresses right, than you spend listening to the Federal Reserve and understand how interest rates work.
And even governments to simply refinance their debts, aka they don't actually pay back their loan. They simply create a new loan to pay for the old loan. The problem with this, however, is that because interest rates have risen, now the terms of the new loan are much more punishing than what they were previously.
Right. So what he's saying, this is the big problem with real estate. This is the problem with MPW. So what you need to understand is understand the interest rate problem. When you understand that, you're going to understand the problem your business has. And if you own this stock, you're in the business of hospital REITs. So go read about them, like seriously, stop being fucking lazy and go read this shit. And yes, it's boring, but so are you. Like we all do lots of boring shit, man. But you have to endure that stuff to understand the business. So guess what? You're going to be 42 one day and you're going to have the same old shit. Things are going to run up. Things are going to run down. They're going to have business cycles. I talk about this and you don't have to die broke. It's called the business cycle. It used to be 5 to 7 years. I don't know. Maybe the time is off a little different now. But if they lower rates, high yield stocks come down. I really think there's still people who don't understand this. They do not understand why MPW is coming down. They are fucking clueless. And yet they own the stock. So they can't see this as an opportunity because of where they bought it. Man, I was at Chris Johnson's house. He was underwater about 50, 60% in this stock because he bought it much higher, which I was too. And I'm sitting there and I was like, now his position was big, like 200-300 grand. He was down like 150. And I was like, are you scared? Are you scared? Do you want me to hold you? Bring it in, Chris. I'll hold you. Because some people need me to hold them. They want me to hold their hand and say, it'll be okay. Bring it in, Chris John. Let's hug it out, bro. Are you going to be okay? And he laughed. Because it's just one position in a whole bunch, man. He knows what's up. He's been through these cycles. He's seen it come down, go up. This is an opportunity, irregardless of where he bought it. Irregardless of where he bought it. So if you do need a hug, I'll give you one. We'll come to New Orleans. I'll hug it out and we can cry a little bit about MP. We can cry about it. We could pull the ticker up and lick our phones and cry about it. Maybe that'll help you. Or you could see it, as an opportunity. So we got a dividend down in here. And then today I actually added to it. I'm not going to keep texting. I usually text the first ad on the stage one. I'm not going to text each single one. Is the market? I just saw that thing move. That was weird. Can we hug through Zoom? We need a virtual hug. My point being, and I'm being obnoxious there, is like, this is a company you own, man. Add to it. If you're not sure why it went down, that means you need to study up, man. So go get studied up. Does that make sense? So this is a great opportunity right here. Here's another one. So I collected $1,500 last night, $1,580 from these new yield max funds. Okay. Well, one of them is with Tesla. And it's like 40, 50% dividend yield. So let's see. TSLY. Well, here's what I did. This here. I put it all back in. I actually think I put like 1,600 total across all the different yield max in the clips. And I don't know, man, the yields are running pretty damn high. And it just keeps jacking my monthly. I'm shocked. I don't know how long these work. I've watched videos after videos. I get a lot of people telling me, oh, these are two. And I say, why? And they really can't explain it to me. And it's like, well, fuck, dude. What if it ends up being an opportunity and you're just being a little bee and you didn't buy any, and now it goes on for years and years and years, so anything new, these are a new type of fund. These are a new type of, it's not necessarily a new type of strategy, but, this one is though. If you go watch the videos on them, these are not designed to go up. These are designed to produce cash flow. Now, let me ask you, these houses here are not really designed to go up, man. I mean, they're going to go up with inflation. Okay. But this isn't a small Southern town. Okay. A 2-bedroom, 1-bath. You can only sell this for so much. The average income in our town is $35,000 a year. I can only make the rent so high. And some people will be like, oh, where I live, rent's 10 times higher. I know. But this is a small rural southern town. It's just not the way it works. You can just get in your car and fucking drive and rent a trailer out in the country. Like the rents are just smaller in bigger space areas. If you shrink and get into the city, get into Houston, get into Dallas, you start putting a zero in front of these. This is a small rural country town, So a lot of people live in these like big cities. Like you live in New York, can't do real estate. Well, I guess just be fucking broke then. I moved to a small town where prices were cheap so that I could buy houses. That was my own. I don't give a fuck about this town. I don't care about this town. This is just one town in a fucking town in Texas. Just drop me off in any town where they have cheap prices, and I'm going to go doing what I was doing. I'm going to go look for shitty beat up 2-bedroom houses that need a lot of work, a lot of repair. You probably need new roofs, new porches, flooring's fucked up. I'm going to crawl under there. I'm going to fix it. I'm going to get it up and going. And then I'm going to take the money from this and I'm going to start pushing it into shit like this. So like what I did is all the money that I've been putting in these yield backs came from rents and other dividends. So as I'm collecting dividends every day, as I'm collecting rents, I start throwing them in here. Now, to establish some positions, I did trim a few things. I trimmed a little profit from Amazon. I trimmed a little profit from Exxon. I trimmed a little profit from, Tesla to establish a position. But the new money is coming from dividends, rent collection. So this month, I'm going to push it all of it that I don't need, I'm going to push into those. And then next month, and then the next month till the end of the year, and try to get it to 3, 4, 5,000. And then just, let it run. And if it runs and works well, then fuck, every 3, 4, 5 months, they'll buy me another house, man. That'd be cool. That'd be cool. You get your Max to where it buys you a house, because it would take me 4 or 5 months once I buy it to get it repaired, get all the materials, get it up, get it rented. Boom. In the meantime, saving for another, man. So I don't know, man. I've got all. That's where you can start. And let's say, and this is just a shitty little house, man. There is nothing about this that's special. This is when I first started posting on Instagram. This is one of my first remodels where I took the entire subfloor out myself and then put it all back in, and we redid it, almost everything. But you can see there's nothing fancy about this, man. Built this. Me and my wife did this. She designed all these. Super simple. This cost about $90. These are 1x6s and 1x2, and we stained them. And these are pipes where you can drill it in, and we had them cut them for us, and we snapped it together, and we made this custom table for about $70, $80. And then I built this countertop. These are 1x6s, stained it, and then sealed it with food sealer so you can cook on it. That cost maybe, I don't know, $220 for that new. And then new hardware, repainted these, all the new. I mean, just simple shit, man. And here's the thing, though. I don't pay for that, man. The other houses pay for it, man, or the dividends. Like, I don't want to spend my money on any of that. I don't want to put any of my money in Hershey's. I want to put other people's money if I can. And it takes a while to get that going. That's the beauty of a Howard Marks, of a Warren Buffett, when you get that process. That's why you can relax as the stock goes down. It's like, if you got more money coming in, you're just going to buy more lower. And if you get it wrong, who gives a fuck, man? You got a bunch right, man. Here's another. Let me give you a PNTT. We showed it went from $2 to $6, or went from 7 to 2, back to almost 7. MFAs, and I'm just go down the list of these that I've owned where they've dropped just absolutely crazy low. And then all I did was just keep adding on stage ones and hope for the best, man. That's all you can do. Let's see. Look at this. This one, they almost went bankrupt, man. Look at this. Fell from that all the way to like 25 cents. Now, that was an unusual circumstances, but started buying more up here in the $4 range. They cut the dividend, kept buying. Now they got back. So, got the dividend back. He says, are we in Wendy's? No, but I have been looking at a few of these food stocks. Look at cake. Look at this. See this breakout? Let's go to the homework page. Let me show you something. These are where I post my moves. This is my trader's log. All right. Now, I normally do this in a journal, but I've been doing it a whiteboard. Now, I like the whiteboard, man. So, I want to show you some trade ideas. Delta, UTSL, Monster, CONL, Cake, AI, Haynes Brands. So, Sunday night, I'm looking at Cake. I'm looking at Haynes Brands. I did look at Wendy's. I'm not in Wendy's. And then yesterday we get our move, and now we're breaking out, and this is going to run. Okay. And that's just because I was going through the restaurant stocks, man. So if you look on here, let's take this in for YouTube. Sorry, YouTube. Did I talk about restaurant stocks? No, I was last week. I was talking about restaurant stocks. Delta, Haynes Brands, Kraft, Tap, Cake, Monster. Expecting a breakout in Haynes Brands. Look at this. That's Sunday night that I posted this. Expecting a breakout in Haynes Brands. Let's see. HBI. So what's today? Today, Monday or Tuesday? Tuesday. All right. So that was Sunday night when I wrote it. Right here. So now we're, I don't know, what are we up? 20, 30%? Now it ripped, man. It took off without me. I didn't get in because we got in during the week here. So I was looking to get in more if it kept going sideways. Now it's ripped. I imagine it'll run up to the 5, 6, 7. They're going to get this company fixed. They're going to get all this shit together. Everybody's going to look back and go, oh, man, I wish I'd have bought a bunch down there at $5. Problem is, when it gets to $5, you get scared. So the way you fix that is just don't give a fuck. You own a bunch of stocks. Some go low, some go high. When it goes low, buy some stage ones, man. That's all you got to do.
And this is already catching up businesses that don't have cash to spare.
Most bankruptcies don't occur because you have a business and it loses money, goes away. It occurs because a business borrows money, times get tough, and when it goes to refinance that loan, nobody ever repays their debts. They just refinance it. And when they go to the bank to refinance it, the bank says, you're not as good a credit as you used to be, or we don't have it.
So look at the Monster. Straight down. Doji. So Sunday night. That's Friday. Sunday night, it opens right here. 48. Or some Monday morning and takes off. Now, none of this. Now, notice there's not a lot of other stocks on here, man. These are trade ideas. Haynes Brands exploded. What else? Monster exploded. What else? AI. We're up in AI, but I wouldn't say it's exploded. Cake took off. This is not because I'm some well, I am good at picking stocks, but it's because I do this all the time. So I'm always watching, looking at the different sectors, doing the wind. Doing the wind. The wind confuses people. The wind is the wind at your back, man. If you're in a sailboat, you need the wind at your back. That's what this is. We just rank them in order. Right now, gold is in the number 1 spot. I saw the professor talking about gold. That was pretty cool. Sunday night, I had gold down as number 1. Oil's number 2. The SPY, then the Qs, then Bitcoin. But Bitcoin was trying to make a comeback. So as I look at this, and I'm not trying to list every growth stock I own. I'm not doing that. I'm just looking at a few that I like. And then look at fucking Snap took off, man. A lot of these took off before I could get to them. We had already added, but I knew they were going to run. I could just see it, man. You can see it in the charts, man. And then there it goes. I promise you, if you do this homework, you'll get much better. If you don't, you will just keep fucking sucking. That's it. That's all. And a lot of people will be like, oh, I don't have time. Well, then good. Have a time to be broke, because that's what you're going to be.
As much money to lend as we used to have, or our standards are higher.
That's what you don't need filters. You don't need any of that. You just need to watch stocks.
Maturity,
so we watch about 200.
And I think that when you go through a period when it's super easy to raise money for any purpose or no purpose, and you go into a period when it's difficult to raise money even for a good purpose, clearly many more companies are going to founder.
This problem has been particularly prevalent in the world of commercial real estate, which you might have seen catching the news across the last 6 months.
So watch commercial real estate.
A property business took on a $10 million loan to buy a piece of commercial real estate a few years back. Back then, the interest rate was 2%, so it only cost them $200,000 a year to own that building. This was a great deal because they leased out that building and made $800,000 a year in rental income, which gave them $600,000 profit. But here's the problem, though. As companies were forced to work from home and interest rates started rising, businesses felt...
Right. So as you go back and you read, because I have 3 loans coming due. The last time I financed them, no business, no investors are getting these 2%. That's homeowners. That's home gamers. Okay. So, I've paid 7, 8, 9% my whole fucking life. So I don't know why that's a problem, but it is. Because a lot of these guys, these YouTubers and people you see are doing the Freddie Mac, they're getting these extremely low rates. A lot of them are doing interest only. And that's how they make the deal cash flow. Because otherwise, only on low interest and interest only is that shit going to cash flow. Well, as they come due, and I have 3 arms coming due, 5-year arms, So I got to refinance those at a higher rate, which will obviously cost more, which will, dig into cash flow. But at the same time, we've been paying on it for 5 years. Building has appreciated, and we raise rent. So we knew this was coming, So that's why it's important that you raise your rents consistently. Yeah, even on the single mom, even on the hand. You got to do it on all of them. You got to raise the rent, man. That's how you pay for these loans and cover everything. That's your responsibility, man. So, but as you learn all that, that explains why O has come down so far, right? Because they're going to have to start rolling loans. It's going to eat into their profits. Their profit margins are going to come down. When profit margins come down, stocks come down. And it's in an environment where they're not as attractive anymore. Why would you own this if you can get 6-7% at the bank with 0 risk? Yes, this is a daily chart. Why would you? There's no reason to own it. And that's another reason for that Hershey's, Kraft, Coca-Cola, a lot of these stocks have come down. Let's check. It's because of that yield. But now some of them are really yielding a lot. So, and that CD and those bonds and all that stuff, if people buying that, if they're not old, either they have a lot of money or they're just complete dipshits. If you have a lot of money, yeah, you're getting 5-6%. That's good, but it's not going to compound, man, because you're never going to get the price down. If the price doesn't come down, you need that price coming down. So as you look at a stock, let's say, and I'll wrap with this. Let's look at Hershey's for just a second. As we look at Hershey's, let's say the dividend yield here is 2%. And let's say you buy it here. And let's say you have it, I don't know, I'm just making up a number. Let's say it's $190. You got $190, you're getting 2%. When it goes to $215, you're getting the same dividend, right? Except you're not getting the dividend yield here. You're getting the dividend yield down here. Right? And your base amount's growing. So over time, what happens is you're not getting a 2%, 3% like you see on Pepsi. Like I've owned Pepsi for 9, 10, 12 years. So I don't get 2%. My return on it is like 9%. My dividend yield's like 9% because I bought it a lot cheaper. And the base and the dividends and all of that have compounded, doubled, and they've raised the dividend. But I only put money in down here. Right? And so when you calculate, let's say I got 19,000 invested in the deal. And over time, it goes to 27,000. Well, I got a $7,000 equity profit. Well, when they pay the dividend up here, they're tracking the yield at 270. That's not mine. So I'm getting this 270 yield, but I only paid 190. So my yield is much higher than the guy buying today. Much higher. And that's how you can have, I showed this, you can have yields in some stocks where, what's Buffett's yield in Coca-Cola? He spent 7 years buying it, 7 years to accumulate his Coke position. Then he stopped. Well, all those dividends, now his dividends is in a year is almost the entire amount 40 years ago when they bought it. So what is his return? Well, Coke only pays a 3-4% dividend yield. Not to him. It's fucking infinite money, man. It's infinite money. I don't even know how you calculate it. So these yields, these yields grow over time. And that's something that a lot of young people misunderstand. They're like, oh, well, your yield's only 2%. It compounds, dummy. So it goes over time. It begins to compound. It's not 2%. Soon you have 10, 12, 15% yields. That's what you're getting. If you got 100 in it and it goes to 200, but they keep raising the dividend, you only paid 100. Every time you get the dividend, you're getting it on the new one. Your yield's going to be double, triple, quadruple what other people got. And you can, anyway, getting off track. I don't know if you understand that. Oh, you buying for the long term. I'm doing everything, man. My brain is humongous. So I buy these houses for the long term. I take their money because they're living here short term. And I might buy some stocks with it. It says you only doing it. And we also, so I buy that. And then I come over here and day trade, right? We can day trade on the TQQ, which we do. And we can swing trade, right? And we can own properties and we can collect dividends. Is your brain too small? You're like, I can only scalp, Gerald. I only have 3 brain cells. I got to put all 3 on scalping. Scalping's fine, bro. You should learn to trade the money flow, though. That's what you should learn. Gerald, I can only do one thing. Let's see. Scalping's fine. I'd rather trade the money flow. I'd rather scalp in the money flow, trade this price pattern here. Any way you trade is fine. If you're a scalper, most of you guys are scalpers because you're shitty traders. I was like, oh, I'm in wholesale. That's code for I ain't got no fucking money and I'm trying to figure out how to buy houses. That's what that's code for. Scalping's fun. We actually do scalp in the money flow because a lot of times, let's pull up the T on the 1 minute. So I trade on the 1 minute during the day, most of the day, right? And then we use some indicators. Let me pull this up. And we do a scalp effect in our trading in that when the first RSI hits, we sell half the position, and that's a scalp. You got in on the breakout, you took it down. So we scalp some, and then we let it run. Because why would I want to scalp it if it's going to run another 50% or another 50 cents and I can make, a bunch of money? You think scalping's harder? Yeah, that's because you're young, bro, and you have a very limited view of the market. It's all the same, man. It's all about the money flow. Whether we're scalping, buying, holding, it's the same. This pattern right here, okay? And none of these are harder. They're all the same, man. What makes it harder? You got to push the button harder? Oh, the button's harder to push when you're scalping. Let's see. There's nothing harder about it. Oh, this thing is fucking up. What is going on with my internet? Come on, man. There ain't nothing harder about it. I'm be honest. Most people go to scalping because they don't know how to manage a trade. And trade's moving against them. They haven't spent a lot of money practicing. So stage 1, stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stops, stage 4 up, Yeah. He says, I'm 40. I love my dividends. You can be 40 and love scalping, love swing trading, love day trading, love dividends, love rentals. Not just one thing. You got to expand your mind. That's the thing. If you understand the money flow, it's all the same. Whether I'm buying a dividend stock, if I'm buying a dividend stock, I'm going to buy it on a stage one when it's below value. If I'm trading, I'm going to buy it after it sells off and goes sideways and starts on a stage one. Then I'm going to enter my trade and I have a spot for my stop loss. If I'm scalping, I want to catch the breakout, get my little boom and get off, and then wait for the next setup. Man, it's all the same. Whether I would be scalping, swinging, buying, the one pattern, it's fractal in nature, works on all time frames. Yeah, he says, I started swing trading, went to day trading. Well, what you should do is learn the money flow, and then you got to move around, and then you can be good at all of it. I'm good at swing trading. I'm good at day trading. I'm good at buy and hold. It's all the same, man. Let's pull up, watch this. Let's pull up BTC. I'm having some internet troubles here. Are we serious right now? I'd recommend you start with none of those and you read my book and learn how to trade, and then paper trade it, and then you can lose your money later. Let's see. My fucking internet would come on. And did the, I don't even know how we're streaming, or maybe it's stock charts. Well, I appreciate that, sir. I'm glad your portfolio is doing well. Yes, guys, once you learn the money flow, it's all the same. You know, it's just a matter of the fractal nature of time. How much time do you want to put into it? If the truth is you'd rather be doing your nails or fucking spooning, then go do that, man. Don't bother. So look, don't bother. You know, it's you got to like trading. So there's the stage one buy. Here's our anchor point. This is Bitcoin on a 1 minute chart. It don't matter if this was a fucking daily or weekly. Here's my anchor point. I'm looking for 4 bars, 1, 2, 3, 4. I needed to at least get over the 5. My initial stops here. We break out. I move my stop up. We start to run. I'm watching the first RSI. First RSI hits here. I sell half the trade. I move my stop to break even. And I do that pattern over and fucking over and fucking over and fucking over and fucking over and over and over and over and over for 20 years now. That exact pattern over and fucking over. Right there, what I just showed you. Over and fucking over. You'd be like, well, I'm a whatever. Don't give a fuck what you are. It's the same pattern, same thing. You could be an upside down Apache Forex day trader. It don't matter. It's all the same, that price pattern. You know, now it gets a little different when you get into stuff like commodities or Forex, because different things move those markets, and you can't do reversion to the mean stuff. Yeah, Delta was on the list for trades this week. That one hasn't broke though, has it? The others have broke. I expect Delta to break. Says, where do you day trade? Trying to right now I'm actually not. We just follow it. I was trying to do it on the futures, so I'm fucking with E-Trade so we can day trade it on the futures, but I'm not currently day trading it. I've been paper trading it now for about 4 months, so it's worked out pretty good. Which is what I teach everyone. When you come into the money flow in our thing, I think you should do. You should look at this pattern, dude. Look at this. Sideways up, sideways down. That is that right there. Sideways up, sideways down, sideways. So pretty. So pretty. So pretty. Yep. I expect Delta to break here soon. Fair value on the stock is $40. We're now trading below the 200-day, and they instituted their dividend. We've got an anchor point. I'd sure like to see it kind of get up in this little box area. If we get that, this is a whole zone too. If you take it down, it's a whole zone of buying off in here. So if we can get in here, I don't know, it's not perfect, this zone here. So I'm kind of keeping an eye on this. But what I'd like to see is we get back into this little box here. That's an easy trade. And that's on my list, man. If you go to list, trade ideas, we're looking for, where's it at? I thought I had Delta on here. Oh, right here. Looking for an entry into Delta, Hasbro, and Kraft. We did really well in Hasbro. Let's see. Now let me show you something here. If you're underwater right here in the RSI banks, some people are like, well, I can't sell it. I'm still underwater. Okay. You can trim it. Because if you trim it and then it falls down to 56 and you got an anchor point, 1, 2, and we're above the 5, now you can put it back on. That's called managing the trade. This is what a lot of people did not do during the crash growth trade. I would get lots of people tell me, oh, I want to be a trader. And what they meant was they just held stocks into the crash. That's not trading. Trading means you make moves based on indicators, not based on what the fuck you paid for it. So even if here you were still down, good. Now you get a little tax write-off as you trim it. And when it comes back down, you're able to put it back down. Thereby, what? Lowering your price point. Thereby actually managing the trade. A lot of people did not do that. They did not manage the trade. And then when it ran up, they didn't trim any because they're still underwater. The RSI doesn't care. Back to what I was saying in the beginning. The only one that cares about where you bought it and what you were doing was you. It has nothing to do with these indicators or the pattern. And look, there's the pattern. Stage 3, stage 4. Now we're getting into a stage 1, man. So focus on the pattern. Remove what you paid for shit. Okay? And if you're a buy and holder, you need to know what is the long-term, what is the true value of the company. So one that I trimmed this week, if you look at the board, I'm always looking at what can I trim. Amgen and MPLX. Well, wasn't that long ago we were buying Amgen. Okay. So look, MPLX, we were buying, I don't know, 4 years ago or so. When these REITs were just getting smashed, or MLPs, they were just getting smashed. They were all really undervalued. So we've just been accumulating shares. Now I'm up 50% after being down 50%. Now I'm up 50%. So I'm trimming because we're at fair value. RSI went 72. So I'm going to take some of that profit off. I'm going to keep it because it still pays me dividends. And I'm going to roll that money. I can roll it into trading. I can roll it into some of those yield max with the 60, 70% dividend yield. I can roll it into O, which is the exact opposite. I can roll it into Hershey's, like in the email I sent out last night. Like, this is what I mean. Like, you would trim because this is a stage 3. And now it's fair value. So if I can sell or trim into a stage 3 at fair value, well, if it keeps going, fine. If it comes back down, well, shit, if it goes down low enough, it'll be undervalued again. And we can start loading back up on it. And that's trading around a position. But once they get fair value and you have profits, you probably want to take them off because you're probably going to come back down. Does that make sense? And not all. You could just sell some. So that's what we did. Amgen, Amgen. Same thing. Amgen's fair value. Look, we bought a lot of this when every time it goes under the 200, I buy some. Look at that. Runs right to it. Boom. Runs right to it. Boom. That's what I was talking about in that email today, the B&B bread and butter strategy. But anyway, this is overvalued, so I'm trimming some. Okay? Trimming some. Just like, where's the one house? Hold on, let me show you. Reason I sold this house. Fair value. It was worth more than I could rent it for. It was worth more than I could rent it for. I bought it 17 years ago, and it was a good deal. I put a lot of equity. The loan's paid for. It's now worth like $220. I can only rent it for $1,100. So what do? I want to roll that 220. That's how I bought a beach house. Part of the reason is I rolled this plus some other money from something I bought 17 years ago to pay cash for a beach house that collected 3 times the cash flow of this thing. It was just time. That's the same as this. Except in stocks, you can trim. It's hard to trim in real estate. You couldn't trim, and that usually looks like borrowing money out. And then you don't have to pay tax. So that's a whole different thing. But to me, a lot of these things are all the same. Once a house is overvalued, I'm looking to get out of it, roll it, pull equity out, something. Once the stock is fair value above, I'm looking to get some equity out, roll that money in something else. Same game. That's just managing money. We might find a house we can flip, might find some land we can flip, might find a stock we can flip, might find a swing trade, might pick up a house that we hold for 3 years and then roll it, right? That'd be a position trade like Uber. I plan to sell in the 60s. You know, but in the meantime, I'm going to trade around it. Hope that makes sense, man. To me, it's all one big portfolio. And I manage money with money. Originally, I just lived drastically below my means, take that money, and I started investing into assets that produce cash flow so I can take the cash flow and put it into other assets that produce cash flow so that thereby increase my cash flow. I don't want to limit myself to, I'm just a Forex trader. That's fucking dumb. I'm just a swing or a scalper, or I'm just this. No. Do everything. You're plenty smart enough, man. You can put your shoes on and your pants. You can eat with a fork and a spoon. You can cut a steak or drink a shake. You're capable of doing lots of different things, okay? Lots of different things at the same time. You can be a buy and holder, collect dividends and at young age, and you buy properties. Like you can do all this shit, man. Your brain's not, you're not a lizard, okay? You're able to expand your brain, learn new things, one thing at a time. Once you got it going, you start doing it. Everybody should be getting dividends, man. Anybody in MFG that didn't get yield max dividends last night, it's like, God damn, dude. I got to come to your house and hold your hand. Please collect money. I mean, come on, man. Why would you not? It don't make no sense. It's just there, man. What's up, William? Hopefully you got back in. What's up? Yeah, man. We'll see how long these things work. We'll see what's up, man. Oh, he asked about trimming Nike. Let's look at Nike. Yeah, it would depend on why you bought Nike, man. But yeah, this is where you trim it. The RSI is hitting 70, and it's a previous high. This is the absolute money flow pattern, man. Yeah, I would trim it. How much? Depends on what the goal is. This is an easy, perfect money flow pattern here. And you got to get clear in your head, man. You got to figure out what it is you're doing. Are you swing trading? Are you buying whole? Like, don't decide that in the process. So when you buy it, if the purpose is to ride it up to 112, then ride it up to 112. And here's the thing: stock market's unfucking limited. Tomorrow, all new stuff. Next day, and every day that you push out, and you're like, oh, I can't make it. It's gonna keep doing it. They're gonna open this motherfucker every day, whether you're there or not. They're gonna pay dividends tomorrow, whether you get any or not. Nobody gives a fuck whether you get up or get in. You're going to have to make yourself, man. So don't buy shit if you don't know your exit or what the purpose or why you're buying it or where it fits into your strategy. That's why it's super important that you separate the buy and hold. And sometimes, but then I have a whole nother. Yeah, I have 7 accounts I log into. And guess what? I have 27 insurance policies, 19 properties, 14 bank accounts. It's called being an adult and running money. So the goal is not to simplify and make your life as easy as possible. That's not the goal. The goal is to make money. It usually doesn't involve easy, by the way, or outsource or a fucking filter. It usually involves fucking grinding and working. So if I was trading this, you got to trim it and start taking it down. Buy and holder? Fuck, I don't know. Probably not. It's still undervalued. So it would depend on why I bought it. But if I'm trading it, I don't care about true value, taking it down. Yeah, so fair value is 120. But that ain't got nothing to do with being a trader. You see what I'm saying? So when I bought this house, what's fair value? When I bought it 17 years ago. Well, guess what? I sold it too. I bet it's worth more now than when I sold it. Do I cry about it? Do I go, oh man, I shouldn't have sold that house? No, it don't matter. So if you're trading, then you trim some, you let it run, and you wait. And until you get a stage 4 decline, you stay with the trade. And so same as I'm day trading. By the time we go stage 3, I've already taken profits. I'm down, and I'm hoping that if I'm, say, day trading 1,000 shares of the TQ, hopefully by the time we go into a stage 4 decline, I'm down to like 200 shares. I'm waiting on this damn thing. Why? So we can come down and I can get back in. So if I'm trading Nike, I'm going to let you in on something. When the RSI bangs, it's going to stop. It's going to go sideways. It's going to pull back, and you can just put it back on, man. So you just need to know what is it you're doing, you know, and how you're trading it. You might need to raise your sophistication level a little bit. You know what I mean? I don't know. I don't know you. I don't know what you're doing or how much money. That's it, man. Also, one thing about fair value, it might take 5 years to get to fair value. Guys. So if you're trading, you're not holding to fair value. You're getting out when it rolls over. You know, you're not trading to full value. You know, and if you're doing trades, you're going to need swing trades. You know, you're probably going to need a bunch. Usually you need to get a lot of swing trades going, man, because swing trades can be very boring. It can take months and months. I mean, look at this. This is all of July and August. This thing didn't go anywhere. So if you're in one or if you're in options, time decay, boring, it's just, you know. But then here, bam, we just run up, man. So this is 5 years. What about opportunity loss? People would bring that up to me. Whenever they discuss opportunity loss, you're making the assumption that you're going to pick the fucking opportunity. If you're so good at it, why didn't you do it this time? So a lot of times when people calculate, well, there's opportunity loss. Well, you realize you're making the fucking assumption that you're going to put it into something that goes up. What if you say, well, I don't want to have opportunity loss, and you take it out and you roll it to some shit that drops by 50%? Is that opportunity loss? Is it? I mean, if you can make that call, why'd you buy this one? So, you know, I'm not a big fan of that concept, opportunity loss. It's based on the thesis that you're going to know the opportunity, which you fucking don't. You have no clue. That's the reality.
Remember the treasure.
Why would you jeopardize that?
So much is that while he sees, obviously seems to agree with him 100%.
This business about using a default as a negotiating tool is very, very dangerous. It's the golden goose. We have this reserve currency status because the dollar is the safest currency in the world and the U.S. economy is the best. Why would you jeopardize that?
So Marx is definitely seeing some issues with the US financial situation, and it's fair to say he's not too impressed. But one thing I admire about Marx and his memos is that while he sees obvious issues in the US financial world, with interest rates rising and citizens, businesses, and the government struggling, he's still very careful not to entertain any sort of prediction as to what the future may hold. This is an important skill as an investor. For Marx, he keeps up to speed with the macroeconomic events, but he does not let them influence his investment decisions.
So if somebody said to you, what is the most common investment mistake that the average person makes, what would you say?
Listen to this.
I think can I do two?
Sure.
Number one is that people believe in the ability to predict the future.
So $2 billion, one of the most successful trader investors of all time. And he says that your favorite TikToker doesn't know his ass from a hole in the ground. He does not know.
Either their ability or others that they can identify. And in general, I agree with John Kenneth Galbraith, who said there are two kinds of forecasters, the ones who don't know and the ones who don't know they don't know. So I think that the average person has to learn that they don't know what the future holds, and nobody else does either.
What?
And once you
What? They don't know? I mean, I get a lot of guys that tell me all the time where the market's going. They ain't got no goddamn money, but they all think they know where the market's going. It is really ridiculous. Once you've been trading for a while, and then you bum that guy, he's like, "Oh man, I don't know, man. I really think." It's like, you sound retarded, dude. Like, you do not know what you're talking about. You have no fuck clue. You have no idea where it's going. You know, and so you got to lose that whole idea that you could just sit and think, and then based on thinking, you figured out where the stock market's going. That is nonsense, complete nonsense. People do it every day, and the truth is they don't know shit. You don't know shit. Most people can barely manage their own fucking checkbook, much less know where the fuck the stock market is going. It's ridiculous. It really is. It's like, but I see all kinds of adults. I'm like, if you knew what I knew, you know how dumb you sound, saying that you think you know where the market's going. They don't have a goddamn clue. The cool thing is, what's good is once you understand this, life gets a lot easier. So what Marx is saying is he's not changing his portfolio based on what he thinks the market's going to do. He might weight some things, right? Like right here, he had a big crash down. What? Do we have a bottom? RSI is extreme. We got an anchor point. Look. So this is McDonald's. So this was one that could have been an options trade, I was saying. These are the kind that I like to do options on. When I do them, everything is pointing. And look, it's all these food companies. Look at that. Look how far we are from the 200. So we're going to see McDonald's get pulled toward it. Now, I already got a big position in McDonald's, so I'm not going to do much with this. But if I hadn't had one, here's your entrance, man. And look how far back we're going, dude. Look at this. This is why you never have to get. Look at this. We are all the way back to the end of 1 year ago, October of 2022. That is the price we have gone back to. Actually, we could say we've gone all the way back to the end of 2021. So if you own McDonald's back here, the end of today, the price is lower than it was 2 years ago. So if you had got in McDonald's up here, you're like, man, I like McDonald's. I rode it from 270 to 3. And now we're at 250. So don't think of lowering your price point. You're just picking up some shares of McDonald's because it's on sale. McDonald's is going to keep going higher. As long as they make money, they're going to shrink the multiple. They're going to increase the dividend, which is going to push the price higher. Over time, all quality stocks go up. That is at the core of the money flow. So we get to take advantage of this type of sell-off. But what Marx is trying to say is understand why. Why is this happening? Because that's going to let you know, should you get in this or maybe not? Is it time to add? And let's say you own this and maybe you're reading, you're like, man, they got more. It's going to go even lower. So then you're just waiting. You're waiting. That's how he's talking. He's not talking about prediction of direction. Fuck, I don't know. It might go up. So the way I solve for that is I believe that over time, my buy and holds go up. I wait for a solid zone of support. I wait for a stage 1 to start. I wait for it to be below value. And if it is, bada bing, bada boom, I start buying. Same as far as selling. Like we talked about at the beginning, I'm looking to sell overvalued stage 3 so I can buy undervalued stage 1s. But I also got to take into account the sector, where it fits in my portfolio. Right now we're doing what? Money management, portfolio management, man. Yeah, so Lisa says she finally started a McDonald's position. Saved 2 years, man. I did the same with Tesla. I used to talk shit about the stock. You know why? Because I wasn't in that stock. Fuck that stock. If I'm not in it, fuck it. I don't care about it. That's my philosophy. They'd be like, what do you think about? Fuck that stock. I'm not in it, so I don't give a fuck. So when we got back here, think about that. Let's see how much time did that save me? Look at this. So when we bought like almost the very bottom in the MFG here on, because we had just been stalking it, because I knew the price had gone all the way back to where it was like 2-3 years ago. So all I had to do by following money flow, be patient and wait, bam, I got the same price the guy who paid 3 years ago got. And then wrote it up for 100. And wrote it up for 100, man. Pulled 100%er. Now, if a guy owned a stock and got 10% a year for 10 years, he'd probably be happy with it. By watching this, I'm able to, boom, I'm able to get it. Now, maybe it goes down for sure, but I'm able to take a shot and it, when I see it at that multi-year low and it's undervalued and it's at a stage 4 and it's setting up on a stage 1, boom. How long was that? We're still in it, man. 100%. It's our 4th one, I think, this year. Last year I had like 12 of them. And the year before that, I had like 4 or 5 takeovers. Twitter was one. Zynga was one. Taco was one. Stamps.com was one. We had a bunch of takeovers. No, we don't back the truck up, man. You don't back the truck up. That's rookie talk, man. That's retail trader talk. Backing the truck up. You just buy some. You establish a position. And then you ride it. That's what the money flow do. We don't YOLO. No. We're trading this forever. So we just buy some, man. Because we don't know. So there is no bagging the truck up because that implies that I think it's going up. I don't know that. I don't know that it's going up. I just see a pattern, And so I don't want to put myself in undue, because if it does go down, I want to just wait for the stage 1 and buy more. I don't want to get myself so loaded in it that now it begins to affect my decision. And people do that. They're like, oh, I bought so much CVS pharmacy. It's like, well, that's because you did poor position management, And don't buy it just because it goes down.
The idea that you will never know what the future holds is actually quite liberating.
Liberating.
You can stop stressing about it and you can simply get back to your rational investing strategy of looking at businesses in your circle of confidence and checking to see whether any of them are undervalued. It frees your mind to start thinking bottom up as opposed to top
Utility
down.
Stocks are about look like they're about to run.
Top down, aka predicting the macro, simply doesn't work. And as an investor looking at your portfolio in late 2023 or even early 2024, it's important to remember this.
Warren Buffett always talks about Ted Williams, who had 400. It means 60% of the time he was out at the plate. The great investors are right 60%, 70%, maybe 80% of the time. If you're the kind of person who has to be right.
Now, if you trade a lot, you can get in flow. You can, start to pick bottoms. I do a pretty good job. Look, calling an audible on Target and Coke. What was the day? 928. When I call an audible, that means I think it's the bottom. That was 928, right? That ain't right. We got the freaking get the numbers wrong on this. I have to go back and check my numbers now. Let me see. I think we got our numbers wrong here. Let's see. Where else did we add? I don't have my. I'm using my phone. $9.4. Should have been that day right there. I think I got my 9s wrong on the thing. Where's 9? 4. So right here. Now, I don't know. That's what I'm trying to say is I don't know. But I do know quality companies when they just get bitch slapped. And I felt like that was probably going to be the low. The next day we open and it comes up, kind of confirms it. And then we hold it. And so you see we start adding. And now we're headed up. Once it gets up into here, I don't want to buy this anymore. Right? So if I'm adding to a stock, adding Coke, adding Kraft, MPW, TSLY. Now I had to cut CHPT. I took a bang on that. Let's see AGQ, silver. So we track silver, gold, Bitcoin. $9.21. Yep. So right here. 1, 2, 3, 4. Boom. That didn't work, right? See, we collapsed. Added more again. So building a silver position. So same thing. What I'm trying to do is I position. I'm trying to only pick up these stage 1. Sell off, go sideways. Sell off, go sideways. Sell off. This one's and one of the things you can tell that these positions were way too extended is you see how these big drop made the moving averages. If you have my course Getting Started with Stock Charts, we talk about this. When these moving averages get this far away, it's usually also an additional sign that at least temporarily this thing's bottoming out. Now, it may run up to here and then turn right around and head down. I have no idea. But now we're breaking out. So that's an example of position trading where I'm adding because that's stage 1 and then it collapses. So as a trader, I got to get stopped out, man. And then what? Wait for the setup again, which would have been right here. But we're position trading it, so I didn't get stopped out. Now we're back. So I didn't take any loss. I was able to add here, and now we're headed up, man. So I'm going to assume we're going to come up into this 31, 30 area. So anyway, man, that's it. I'm going to wrap it up. You guys be good. Hope that helped. Get on over there. Check out the newsletter. Maybe that can help you. Click on the podcast. I need to update a new one today. We're going to try to do one. Maybe you should be on my podcast, man. Maybe start doing a little more. Maybe start trying to get rich. That's what I'm thinking. I love this. Let's end with it.